What's up, everyone? Dylan here. I wanted to hop on and do a new episode of the weekly analysis video. As always, I'm going to be talking about recent price action. I'm also going to share my thoughts on where I believe the market heads next. And then I'm also going to share 3 different stocks that I have started to accumulate a long position on for, a bullish move. Okay, so with that said, we'll hop right into it. Last week's video, I said that I would be surprised if SPX did not break new all-time highs in the near term. The reason I said that, as I went over in last week's video, was because of the fact that the SPX was so resilient despite some bearish news coming out. Okay, that basically told me that the momentum was still on the bull side, right? Technicals were still favorable, and the path of least resistance remained to the upside. And that is exactly what unfolded. Now we are looking at my chart, and we clearly see that the SPX did in fact break to all new all-time highs as it broke above the previous high that was made over 2 years ago. Okay, so Dylan, what's next? What do I think is going to happen in the near term? To preface, if you're looking to do short-term day trades, this is not going to apply to you, okay? Instead, this is for those of you that are wondering if you should chase the highs and add to your portfolios for a longer-term outlook, okay? So, with that said, I'm going to talk about some pieces of context that make me believe that this move higher might not sustain in the near term and that we are setting up for a pullback. When do I believe that will happen? I cannot give you a specific time frame, okay? But I personally would not add longs up here, okay? So with that said, I'll show you guys what I'm seeing. So we've gone over the RSI divergence on this YouTube page before, but in plain English, basically what we're seeing is a higher high being made on the S&P cash index, whereas the RSI is making a lower high, okay? What that shows is that there is less strength on this new higher high breakout, okay? And essentially what that tends to kind of forecast is that this move higher is going to be short-lived, okay? Think about it. If this breakout higher is being done with less relative strength, then, there's how would you assume that it's going to be able to sustain value, okay? So ideally what the bulls would have wanted to see is this higher high being met with at least comparable highs on the RSI, if not higher highs also on the RSI, okay? So that right there is slightly weak looking. Okay. Also, I wanted to talk about positioning. Okay. A few different things that I wanted to show you. The source on this one is Macro Visor via Twitter. They post really, really good snapshots like the ones that I'm going to show you. So these 2 pieces of screenshots or context show that the positioning is very, very, very long. Okay, both non-dealers, right? So both retail investors and traders and CTAs, which are usually controlled by funds. Okay, CTAs are like algorithms. You could clearly see, right? U.S. equity futures, right? S&P, NASDAQ, their positioning has hit an all-time high recently, suggesting that participation is becoming increasingly lopsided to the long side. Okay, then on the flip side, like I said, for CTAs, same deal. You have rather stretched positioning levels. Okay, now some of you might be looking at this and being like, okay, well, if so many people are long, then the market is going to continue upside. That could be the case. I'm not going to sit here and tell you that that's impossible. However, when you have lopsided positioning, it basically makes the S&P or equity futures in general more vulnerable to sudden drops. Because if everyone is long, right, and you have a lot of people that are chasing momentum to the upside, if and when a piece of bearish news comes out and it sparks some downside pressure, now you have so many people that are trapped near the highs that are going to panic sell, right? So you have so many people that are going to be underwater if price aggressively drops, and like I said, when you have lopsided or crowded on one end, it sets up for more panic potential and just more volatility, right, in plain English. Okay, so that brings me to the next piece of context, right? This is on CNN business page. It is the Fear and Greed Index. From my understanding, there's 3 different Fear and Greed Index that people tend to use. This is probably the most well-known one. So essentially, this kind of goes hand in hand with the positioning, right? Positioning is very, very lopsided to the long side, which means that, majority of market participants are bullish, right? They are optimistic that the market is going to continue higher. And as a result, that's what makes this index, right, this barometer, go very greedy, right? People are assuming that the market is going to continue higher, right? They are becoming greedy. They are, aggressively chasing momentum to the upside because of their greed. Usually, not always, but usually when this index gets to these levels, right, 75 or more, which is basically right where it's at, it tends to mark a near-term high for that index to kind of digest and reset, okay? Now, does it always end up doing that? No. But it's a pretty good, sentiment reader in terms of when to know when not to be aggressive, okay? And right now, considering positioning on retail and fund CTAs is very lopsided and very, very, aggressive to all-time high levels in terms of dollar amounts, and the overall market is very greedy right now. Like I said, I personally would not go out and tell people to get overly aggressive to the long side at current levels. Okay, this makes the market much more vulnerable to sudden drops, just in case sentiment starts to flip. Even the slightest bit can cause a much more aggressive drop. Okay, hopefully that makes sense. Also, I wanted to talk about market breadth. Okay, this is from Mentor Q. He's on Twitter, or they're on Twitter, and he wrote that market breadth refers to techniques used to gauge the number of stocks participating in a market move. It provides insights into whether the movement in an index like the S&P 500 is broadly supported or not. Ideally, when you have the market making all-time highs, you want the market breadth to be high, meaning that the movement in the index is broadly supported, right? Meaning if the S&P is comprised of 500 different names, you want the vast majority of those 500 names to also be making or close to making all-time highs, just so that you don't rely on any sector to outperform the others, okay? So what that person did on Twitter was he used this ticker right here. It's S5TH. S5TH. That's what it is on TradingView. I don't know what it is on other platforms, okay? Literally, what this is a percentage. This y-axis is a percentage of the amount of stocks inside of the S&P 500 that are above the 200-day moving average, okay? So the bad thing about this recent all-time high on SPX is the fact that it is not being done in a broad manner. Okay, so essentially, basically, this is a divergence, right? SPX is moving higher, whereas S5TH has been declining. Okay, this implies that there's more and more as the day goes on, as the days go by. There's more and more stocks in the S&P 500 that are declining back below their 200-day moving average. Okay, that's not what you want to see. So in terms of positioning being very stretched, the RSI showing a negative divergence, and the breadth being not so great, I wouldn't chase in plain English. Could the market continue higher? Yes, it is very possible. But what would need to happen is the names that are outperforming, let's just say the semiconductors, right? You could use SOXX. Okay, this is a semiconductor ETF, right? You could clearly see that this is outperforming. This is part of the reason as to why the NASDAQ and the S&P continue higher and higher, and they don't rely on the breadth to, be high, okay? However, if this name, right, if the semiconductors that have been outperforming, if they stop outperforming, and the other market, the pieces of market, right, companies in the S&P 500 continue declining, then what's going to hold up the overall market, right? If you take out the outperformers and the other broad names continue lower, you have nothing that is holding up the market. So you're basically putting so much stress on the names that have been outperforming to continue to outperform. But if they stop outperforming, then what? It's going to be a freaking rug pull, right? In theory. So the breadth, ideally, you want the overall market as a whole to be strong as well, so that you're not relying on a handful of names to kind of sustain value for the entire market as a whole. Okay, so that's that. I also wanted to cover VIX. So if you guys are in the Discord watching this, you guys will know that I personally do not like to use VIX. Instead, I use the VIX futures. Okay. However, for a public video, I'm going to go over VIX. And it is okay to use for a longer term macro view, such as the weekly chart. Okay. So this 1210 to 1110 area, right? Those two golden lines. You could clearly see since 2018, it has acted as a very, very strong bottom. Every time price has gotten into that 1210 to 1110 range, it has bounced. And with the VIX bouncing, those bounces have correlated or coincided with tops in the S&P. Okay, so now that we are back down to this area, in combination with the context that I've been sharing in terms of this recent breakout to new all-time highs, I'm sure you're kind of seeing where I'm getting at, but I personally would not add to my portfolio at current levels on the S&P, and basically I'm implying that the market is going to come off in plain English. So if the VIX does in fact break away from this and bounces, it's going to put more pressure on the S&P 500 in plain English. Okay, that's just how it works. So you could look at these, every low that has kind of bounced off those two gold levels have coincided with the S&P dropping. So now that it's back at these macro areas of support, it's definitely worth keeping an eye on. Okay. Also, I wanted to share this little post from Citi Market Intelligence, right? They wrote that NASDAQ futures positioning is at 3-year highs, With an average position profits nearing 5%, these stretch positions are ripe for potential profit taking, which may pose a challenge for further upward movement in the market. Right, going back to, say, SOXX and semiconductors, right? If the market is ripe for potential profit taking on those recent gains, right, Citi said that may pose a challenge for further upward momentum and movement in the market. So it kind of goes along with what I've been saying. Am I right? Who the hell knows? I could be dead wrong in saying this stuff, but this is what I've been looking at, so it's worth noting. Going into the 3 names that I have started to accumulate shares on. Okay, this is literally as of this week, mainly today, but also a little bit yesterday. I've been accumulating shares on 3 things. Now, some of you might be saying, well, Dylan, you're telling us not to add long positions in our portfolios at current levels on the S&P, now that the S&P is at new highs, with this, context showing that there's some weakness. Okay? My argument to that is these names don't correlate with the S&P 500. These names have different flows that they correlate to. So I don't need representation or support from the S&P and the NASDAQ in order for these positions to work out in, the near term, medium term, or long term. Okay. Ideally, I would like for the overall market to move in a broad manner, but I don't have to rely on that. Okay. So first name is Coinbase. Okay. So I'm going to kind of go over my thoughts, right? Why am I looking at this? First off, it has pulled back 35% since the Bitcoin ETFs came out, right? As has Bitcoin, right? Bitcoin USD, right? You could see that Bitcoin, since the ETF came out, it was another blow off top. It's down a little over 20% from the recent highs, right? So Coinbase has been following along with that movement in the spot. So I believe that it's coming down to a key technical area, okay? So yesterday I bought some, right? We have some technical trend line here, right? From the July highs, got another bounce in November, and then again on Friday, okay? So I bought some yesterday, and then I bought some more today. You could also see this level here, right? It was previous support, then resistance, okay? So in between, say, 125 and 112, I would like to slowly accumulate. Right now, I have a starter position. If it wants to pull back, I will welcome the pullback with open arms. In plain English, I would love for it to pull back so that I can accumulate more at better levels, okay? So in this general area would be ideal, okay? Also, Bitcoin and Ethereum are also coming down to key technical areas that align with Coinbase, which is ideal, okay? Now, this is the interesting part, and this is more so on the fundamental side as opposed to the technicals. With the new ETFs that came out for Bitcoin, okay, some of the major ETF issuers, such as Grayscale and iShares, do not have their own Bitcoin custody operations to hold the actual Bitcoin. So think about like a cloud, right, for storage, right? When inflows go into the ETFs, those ETF issuers literally buy Bitcoin, right? It is directly correlated with the spot fluctuations of Bitcoin. So when you have all of these inflows into these ETFs, these new ETFs that got approved, they have to go out and buy Bitcoin. And they have to store those Bitcoin. So the majority of the ETF issuers don't have their own Bitcoin custody operations to hold the Bitcoin. So who do you think they use, right? So instead, these Bitcoin ETF issuers have been using Coinbase as their custodian. And that is clearly a positive for the stock because Coinbase is now increasing their revenue with all of these transaction fees. Think about it. You have billions, tens of billions of dollars coming into these ETFs, these new ETFs that were approved, and they were using Coinbase as their custodians, okay? And with that said, that is going to probably increase the freaking earnings of Coinbase, and as a result, their valuation increases. So that, in my opinion, is like, oh my God, if this thing pulls back, I'm going to load up, okay? So that is where I'm at. So I gave you guys an area, I gave you guys a reason. Now I'm hoping for the overall macro space of cryptocurrency to catch a bid, which will help Coinbase move higher. Now, like I said, technically, Bitcoin could sell off and Coinbase will still be, benefited, because when you have sell-offs in Bitcoin, it makes investors panic sell. And by panic selling, they are having, transactional fees. So whether Bitcoin goes up or down, people have to spend money on Coinbase and give them more revenue. So hopefully I'm right on this, but I think it's like a kind of a no-brainer. Could I be wrong? 100%. However, I am pretty confident about this. I don't know if you guys remember, but I gave you guys TLT on this channel about like 3 months ago. I said that I was going to be buying TLT for leaps, and some of those leaps went up 500%. So I'm hoping that some of you guys took that trade as well. So this Coinbase trade is basically like the second like specific leap position that I have shared on this channel. So hopefully it works as good as TLT did. So for this one, for TLT, I used options. I used 3 different expiration in the options. For Coinbase, this is with shares, okay? For Coinbase, I do not want to be held back with timing, okay? I don't want to have to be restricted with the timing, so that's why I did not play options. If you want to play options, have at it. I would probably go minimum 3 to 6 months out, if not even further, a year, 2 years, whatever, whatever floats your boat. The next names that I have started to buy this week are FXI and KWeb, okay? So this is another, thing that has been getting beaten down, right? These are Chinese names. So basically, FXI is like the S&P of China, and then KWeb is equivalent to like the NASDAQ of China. So basically, I'm just buying SPY and QQQ, but in China, in simpler terms. So there has been a lot of negativity in China. I'm going to share this link in in this YouTube channel down below. And I recommend that you guys read this. It kind of goes over, the negativity that has been surrounding Chinese stock market. Okay, so basically, just some facts here. Hang Seng, which is the index of China, is down 12% year to date. And mind you, it's only been 3 weeks, so 12% year to date, whereas SPX just broke freaking all-time highs. That's a massive divergence, okay? It is now at the lowest level since 2009, okay? Also, there was an Asian hedge fund named Asia Genesis that just shut down. This news came out yesterday, from my understanding. So basically, there's been some capitulation. Usually, capitulation marks bottoms. Now, could this scenario be any different? Of course. But essentially what happened is Asia Genesis, which is the hedge fund, has been in business for 30 years. So it's not like they're like some, new freaking Joe Schmo on the block. They've been around for 30 years and they had $330 million under management. So over the last 3 weeks, their fund has been down 18.8%, and the CEO came out and posted a investor letter and said basically, hey, I'm closing up shop. I have lost all confidence as a trader, right? Basically what he was doing, he was long China and short Japan. He was trying to long that spread between the two indices. And he got freaking wiped out in plain English because China has been freaking bleeding, whereas Japan has been basically going ham, right? It's been on an increase, right? It's been rallying, whereas Hang Seng has been declining, right? So he was long Hang Seng and short Japan, and he freaking blew out. So usually, not always, but usually that capitulation tends to mark bottoms. Also, on top of that, look where it bounced. It bounced right at its lows in October of 2022. Talking about FXI. So, that's basically a clear, sign that the technicals are being defended from the bull side as of right now. I also wanted to highlight this share. You guys can pause it. But AJ Button 2 on Twitter talked about some bullet points of some bullish news coming out of Chinese sentiment, and that's kind of what caused this 4.5% gap up and rally today. And Baba, as you could see in that guy's tweet, also rallied 7.8% because Jack Ma and the CEO bought millions or hundreds of millions of dollars in insider buys over the last quarter. So clearly, if you have insider buying taking place, that means that the ownership, right, the insiders that work for the company are optimistic and they believe that they're going to outperform in the future. And that's basically what it means. I think the risk reward is favorable, and as a result, I wanted to, kind of dip my toes and start to accumulate a starter position. If this does pull back, I will gladly add. Okay, like I said, this is a longer term position, right? I don't mind holding this for, 3 months, 6 months, 9 months, 12 months, and a couple years if it gives me some good action to the upside. I'll be patient as hell. And similar to Coinbase, this is using shares. This is not using options. So that's that. Also, this is from Jake W.U. Market Research. He shows the seasonality of Alibaba. Ever since 2017, every single January has outperformed, right? So you could pause this picture, all right? Pause the video, and you could clearly see that Baba has some seasonality aspects to it as well, which is also being used in my context. And one last thing, if we go to USD CNH, right? This shows the spread between the U.S. dollar, the Dixie, and the Chinese yuan, whatever the hell it's called. Okay, essentially, we'll go to a 3-day chart. Basically, if this breaks this trend line, it will benefit the Hang Seng and also FXI and KWeb. So I'm hoping that this trend line breaches to the downside, which will help these positions that I just shared. If the opposite occurs where price bounces there and continues higher, then the FXI and KWeb are more vulnerable to further declines. And like I said, I will add to the positions if that's the case. So that's about it. If you guys like this video, please give it a thumbs up. Feedback is always appreciated. And that's it. Peace.